All right, we'll go ahead and get started and let people in as they join, just given it's the summertime. And of course, we'll distribute this recording to everyone afterwards. But first and foremost, welcome. Today, we'll be covering the new rules of corporate climate accounting. What do impact-focused buyers need to know? And thanks so much to Merva, Chandni, and Laura, who will introduce themselves in a bit for joining today as panelists. First, just introduce myself. I'm Doug Miller, Director of Market Development at Energy Peace Partners, EPP, which is a nonprofit focused on expanding clean energy access in the world's most fragile under-electrified regions. And really excited for the conversation today. One thing to note is if you have questions, please add them to the Q&A box throughout the call. We will come to these later in the conversation. And also, thanks to all those who registered. We have a number of corporate buyers, advisory firms, standard bodies, and various other stakeholders. And essentially, we'll just dive right in so we can have the most robust conversation possible today. And I think as people know, recently the Science-Based Targets Initiative, or SBTi, published the new version of their corporate net zero standard. And essentially, this sets the framework for both corporate target setting and how companies can make progress towards those targets to reducing all scopes of emissions. And first, before opening up for questions to the panelists, just want to provide a brief overview of the perspective of Energy Peace Partners in terms of what we see as the most notable points from the latest version of the corporate net zero standard, at least as it relates to impact-focused buyers who want to use their clean energy procurement to drive the greatest impact possible. So very briefly, 5 specific points that we think are most notable for impact buyers. The first maybe is a simple point, is that going into the corporate net zero process, revision process, of which I'm an expert working group member, it was not yet necessarily clear that energy attribute certificates, EACs, would continue to be recognized. And so luckily, EACs will continue to remain the currency of clean energy procurement, reporting, and claims. In other words, these are treated as the highest form of evidence backing any clean energy claim, which is a really important point. The second point we want to highlight today is it's an interesting development that SBTi is now requiring that all companies must report their location-based emissions. Historically, companies could choose between their location-based emissions versus market-based emissions. And the logic behind this essentially is that location-based emissions reflect the physical inventory, the physical emissions that a company is polluting, and essentially creates the strong incentive for energy efficiency. And market-based emissions thus are treated as voluntary. That said, most companies we expect will continue to report market-based emissions because that's where companies can take a lot of the available actions to reduce emissions and make a positive contribution to decarbonizing shared systems like the power sector. The third point is that previously proposed hourly deliverability or 24/7 requirements were removed from Scope 2 market-based accounting. And so essentially what changed is that SBTi is requiring that companies that have a very large source of consumption of electricity in a specific market, that they have to report their hourly score, essentially more like a recognition program to indicate what portion of their clean energy purchasing is linked on an hour-by-hour basis to their consumption. But again, that's only for really large buyers, and it's disconnected from market-based emissions, which we think is really important because of some of the limitations of actually implementing hourly in most markets and for most buyers. The fourth point is that a really exciting one, that there's greater clarity that companies can apply energy attribute certificates or EACs for like Scope 3 emissions. And what I mean by that is companies can more clearly now use clean electricity certificates to help decarbonize the electricity-based emissions, or Scope 2, of their suppliers and customers. So upstream and downstream electricity use, you can use clean electricity certificates for that to reduce those emissions. The last point, and then we'll open up to the panelists, is a new recognition framework called the Ongoing Emissions Responsibility Framework, or OER. And this is exciting because essentially it creates a new kind of catch-all for the wider variety of impact-focused solutions that historically didn't really have a place for reporting. And it appears that high-impact solutions like Peace Renewable Energy Credits, or PRECs, which are a special type of clean energy expanding energy access in fragile regions across the globe, primarily sub-Saharan Africa, will count under the OER framework under one of the two tracks. So very essentially, the way the OER framework works is that there are three tiers: entry level, mid level, high level, essentially. And based on whichever target a company sets, which then respectively is 1, 10, or 40% of to reduce those emissions. Companies then have two different tracks they can follow, either what's called ton for tons or money for tons. Those are the two different approaches. Solutions like PRECs that are essentially not carbon credits, the ton for tons approach is for carbon credits. The money for tons approach is for all other solutions that help make a dent in reducing emissions, promoting resiliency, expanding energy access, et cetera. And so this is a really exciting opportunity for companies that want to pursue impact for where that impact reporting will live. So then without further ado, I want open up to the panelists. So what I'll ask each of you to do, and I can mention your names so we can go in the right order, is first just to share your name and title and organization, and then your response to the question, which update to SBTi or potential change to GHGP, the Greenhouse Gas Protocol, do you think is the most important one for impact-focused buyers to track or pay attention to? And maybe we start with you, Chandni.
Yes, nice to see all of you. My name is Chandni. I am a manager at WattTime, and I focus pretty primarily on impact accounting and building impact accounting frameworks. And so for me, and I think for a lot of us at WattTime, the most interesting thing to keep track of, both with SBTi and Greenhouse Gas Protocol, is and particularly, I think with the Greenhouse Gas Protocol, the potentially emerging um, impact framework and impact accounting statement that's happening under the Actions and Market Instruments white paper. I think this is the first time that that impact accounting or any kind of avoided emissions methodology has been included in anything quite so significant. I think avoided emissions has existed for a long time, but kind of in a standard that's been pushed aside for quite a long time. So I think that's really significant. And then I think the other thing is just sort of keeping track of where the deliverability hourly matching debate goes. But it's nice to see you all. Happy to chat today.
Thanks, Chandni. Laura, over to you.
Everyone, Laura Vendetta, Director of Regulatory Affairs at 3 Degrees. For those not familiar with 3 Degrees, we are a leading global climate solutions provider. Our work is driven by the need for urgent climate action, and it has been for nearly 20 years. As head of the company's regulatory affairs team, my team is deeply immersed in how policies and regulations impact the company as well as our clients and the broader industry. I would agree with Shamini that one of the most promising changes is the acceptance of project-based accounting as a way to demonstrate progress towards one's SBTi goal. But I'll maybe focus and say that I think the ongoing emissions responsibility framework is another notable change from V1.3 to V1.2. I think that has the ability to really drive additional climate action from companies. And really excited to see that included as a voluntary program for the short term, as well as becoming mandatory over time. So really excited to see that sort of develop and give companies an option to go beyond their value chain and demonstrate action.
Thanks, Laura. What about you, Merve?
Thanks, Doug. Hi, everyone. I'm Merve from Rex Energy Certificate Association. We are based in Europe, and a majority of our membership is from Europe, but we say we have a European focus with a global perspective because we have members from outside of Europe as well. I am a policy and network manager, and I'm following several ISO standards, and some of them are going to be part of the dual logo standard with the GHGP revision process. And I also follow EU regulations and policies regarding carbon accounting. And I would say the most important thing for impact-focused corporates to track, particularly in Europe, would be the deliverability requirements. because we see that SBTi also includes a deliverable boundary definition. And it's not clear at this point whether GHGP will go ahead with their proposal, because in the ISO working groups, there are some discussions still happening about this. But this basically is going to be a big change to how European companies based in Europe, basically report their scope 2 emissions.
Thanks for that, Merve. Now on to the broader buyer landscape. And so, Laura, a question for you is, based on your perspective and the fact that 3 Degrees interacts with many buyers, how are buyers thinking about this evolving landscape of climate-related target setting and accounting rules? Is there any additional context about how buyer sentiment, how buyers are navigating these changes that you want to share with the group here?
Yeah, well, maybe first I'll say it's a difficult question to generalize in the response. I'd say that the one thing that the corporate net zero V2 introduces is many new target setting pathways, implementation options, and as well as additional leadership recognition programs. And so I think most buyers are still absorbing the key elements of the V2 framework, and particularly in the context of their own targets, whether they have a current target or are looking to set a future target. So for example, I've heard, mixed reactions from buyers in terms of, if you're a buyer that has a current target under V1.3, many are looking at how to incorporate elements of V2 into their current target strategy, which is something that the V2 framework recognizes and supports. At the same time, I've heard from other buyers who might be looking at completely revising their current SBTi target to align with the new V2 framework, or companies that are in the process or are looking to set a new SBTi target in the future and are trying to better understand V2 to help frame those strategy and planning decisions. And so it does look a bit different for each buyer in terms of how they set, what kind of target they currently have or plan to set, what actions they want to take, and so forth. I guess a piece that I've heard, mixed sentiment and feedback on is the legacy clause within the V2 version. I think first and foremost, I think it's great that SBTi has recognized that all existing contracts will be recognized under V2 until February 1, 2027. Many buyers have taken action despite clarity from SBTi and Greenhouse Gas Protocol, and ensuring that those contracts are still recognized, I think, is really important to the voluntary market. At the same time, many buyers have contracts that are currently under active negotiation and sort of in various stages of development. And so trying to, secure and lock those contracts in before the legacy clause cutoff date seems to will be challenging for many buyers. That's a really short sort of window for folks to finish and execute contracts. I think I've heard from some buyers that, that's just not feasible or realistic. And so there's some mixed reactions there. And then I think the other piece where I've heard just more questions and not necessarily uncertainty, but just buyers looking for additional clarity or an understanding is how to navigate the actions of market instruments hierarchy, particularly understanding the various quality criteria for each instruments in each scope. I know SBTi will be providing additional clarity on that throughout 2020 or later in 2026. And so that is an area that I think a lot of buyers are trying to understand what it actually means when it comes to procuring a EAC to use for scope 3 or an EAC to use for scope 1 and whatnot. And that is an area of sort of ambiguity still as SBTi plans to release additional guidance. But I think overall, many buyers are excited about this new framework. Like you said, Doug, I think the acceptance and recognition of the use of EACs across scopes 1, 2, and 3 is a significant step forward for the framework. And so really right now buyers are digesting the framework. What does it mean for their individual companies' goals, and how are they going to adjust or pivot or incorporate elements of the new framework over the next few years?
Thanks, Laura. And just on your one point, I know that there will be more clarity coming soon from SBTi. The expert working groups are continuing to work on this kind of next chapter now that the new corporate net zero standard has been published on more of the implementation side and providing clarity on that front. So now over to you, Chandni. The topic here is the idea of impact. And I think for many of us, when we talk about impact, it's about how do we decarbonize the power sector, which is essentially the largest source of emissions. And it's one that's shared across corporates, households, et cetera. And where, of course, a lot of us are trying to find ways to how do we bridge the finance gap to pay for moving our power sector toward a lower carbon system. And so just in the context of SBTi and also GHGP, I'm just curious to hear, what changes to SBTi's corporate net zero standard are most helpful for this idea of decarbonization impact or avoided emissions or consequential emissions accounting. I know it comes under different names. So what part of this new rule is most helpful, and any particular elements, and maybe you want to build on some of your points earlier on the AMI as it relates to the greenhouse gas protocol?
Yeah, and I might actually have to throw some of this back to you at some point because you've been on the working group, so you might be able to clear up some of this, maybe a little bit stuff that feels a little bit more ambiguous. But with SBTi in particular, all of the target setting, all of the official target setting within the SBTi is still dependent on a physical inventory, which means you would have to, all of the things that count towards your targets would have to be changes that occur within your value chain, within your physical inventory. And that is pretty different inherently from any kind of like impact focused methodology, which doesn't care quite so much where your facilities are located and what your physical inventory is, and is much more concerned with your marginal emissions impact and kind of where you can have the most decarbonization impact, regardless of where you have your facilities. And so right now, it looks like there are maybe potentially two spots within SBTi. Within Scope 2 reporting itself, things like PPAs in general, market instruments, I don't think count towards your target if you've settled on a absolute emissions reduction pathway. But if you've settled on a low carbon energy pathway for Scope 2, market-based instruments do count. But even within that, the priority for that is market-based instruments within your value chain. So if you're going to do something, let's say if you have a facility in California, but you've decided to do a PPA in Vietnam because your avoided emissions methodology kind of helped you kind of realize that that was where you're going to have the most decarbonization impact. Right now, there's no way to really report that within SBTi. You can report it potentially through some of their like other more um, I can't think of the word right now, but you can report them through things that aren't related directly to your targets. You can provide kind of verbal explanation for things, but they don't count towards that. Um, and then the other thing, as Doug mentioned, is the ongoing emissions reductions, that recognition framework. And that does allow companies to take actions that happen outside their value chains that contribute towards mitigation efforts. But, and this is kind of where I was going to throw it back to you, Doug, is it was a little unclear to me whether or not things like PPAs in other parts of the world would count within that framework, because it looked like the requirements there were like sources or were carbon sinks, and a couple of things that felt very specific, and things like procurement were not listed in there. And so I think it's definitely a step in the right direction in that there is a space now, I think, for more impact-focused procurement and impact-focused actions to be taken and to be reported. With that being said, quite like the greenhouse gas protocol, they're not necessarily considered required yet. And I think that is partially in my assumption is that it's partially because the greenhouse gas protocol is figuring this out as well. As I mentioned, the Actions and Market Instruments Working Group released a white paper within the Greenhouse Gas Protocol that is now providing a pathway for people to report things like avoided emissions and have an impact statement. But all of that is in flux right now. And so I think the process of kind of trying to align two different pathways or two different frameworks, both of which are changing as we speak, I think is maybe causing a little bit of um, maybe not confusion, but a little bit of back and forth in terms of what's going to end up being settled in there. But that is, I say all that to say that that is why the call to evidence for SBTi, which is probably I've heard likely going to happen in Q4, I think is going to be really important for folks to weigh in on. If you have thoughts on ensuring that avoided emissions or impact accounting gets adopted as mandatory in some capacity, that's really the place to kind of explain that. And if you feel like you've got procurement that now won't count, that's definitely a place to say that.
Yeah, and so I think thanks for that, Chandni. I think a couple main points in response are one, that just because the corporate net zero standard is now published doesn't mean the work is finished. Unfortunately slash fortunately, and that there's a lot of need for greater clarity, and there are going to be more opportunities to provide that input, essentially translating the standard into actionable guidance that companies can use on a year-to-year basis. So I think that's one important point. The other, just to some of your questions, I think you're right to say that some of these questions or especially around geographic boundaries or market boundaries, has been purposefully left vague and essentially waiting until there's clarity from the Greenhouse Gas Protocol and ISO. So I think that is why there's some lack of clarity at this stage, but I think that will all come together and then hopefully the coming months. Then one other point too, because you brought this up, Shani, is that Energy Peace Partners, my colleague sits on the Scope 2 working group under Greenhouse Gas Protocol, and in parallel, we've contributed to various survey processes from the Greenhouse Gas Protocol. The most recent of which was the Actions on Market Instruments survey that you mentioned, and I'm going to share a link in the chat in a minute. But essentially, we submitted a very detailed proposal, also one we think is quite implementable or with relative ease in terms of how might we recognize the idea of decarbonization impact or impact accounting. And the way that we've proposed it essentially is to say, let's introduce a third new ledger, one that sits alongside location-based method and market-based method. And the new emissions impact-based method, or EIM, would essentially look at what was the carbon intensity of the markets where you bought clean energy. And so it's essentially a double click on the clean energy that a company bought. And it then looks at what is the carbon intensity of that market, and where there is hourly data, the time of day in that market. So a company can then say, well, maybe we deprioritized a global geographic match under market-based accounting because we prioritized our procurement toward the locations and times that are the most carbon intensive. And this would then create that ledger to reflect that strategy. And so I'll share the link in a second here. And maybe the last point, Chani, is I think the OER framework also provides this. Again, it's kind of a catch-all where if there are impactful solutions where it doesn't fit neatly in some of these other avenues, it's at least a place where you can insert them, especially the money for tons approach. And so now, Merva, over to you. I know that you've been in particular tracking the dual logo standard around the ISO and GHG protocol. And so I'm curious, just based on where SBTi landed and just other research that you and your team have been doing, what are some of the most important questions, or maybe you just want to elaborate on some of the ones you brought up earlier in terms of the dual logo process as it relates to impact-focused buyers? Is there anything that, based on where SBTi went, that might kind of show where what the direction of travel is for the dual logo process?
Yeah, sure. Before that, though, I want to add something Chandni mentioned just now. So, because we're talking about impact, right? But it seems to us that particularly for the GHGP, because the Scope 2 text was open to public consultation late last year, and there, like to us, it seems that they prioritize accuracy and precision over impact. I mean, they claim that through this more precise way of reporting, you would get more impact and you would give stronger market signals, which we, as the representatives of the market participants, have a big question mark as to how exactly that would take place. And because when we talk about impact, so SBTi does make a distinction between larger companies and smaller companies and those in higher income countries and lower income countries. But then again, we see impact as a choice the reporting organization makes. So if you prescribe one way of reaching impact, then you are basically leaving majority of the market out, and we see a higher uptake of reporting, particularly for scope 2, is the way to go, because then your definition of impact that matches with your brand identity maybe, or you could have other preferences, is going to be something you follow, whereas me or Chani or Laura could follow different pathways. But basically, all of us take action. That would be what unites us and motivates us under reporting scope 2. And so you asked about the process of the dual logo standard. About the process, I would say, so basically the proposed text for scope 2 marked the end of the phase 1 for the GHGP scope 2 technical working groups work, and there are 2 phases. Now we are in the second phase. But basically, the ISO working group experts were left out of phase 1 completely. And the discussions happening in ISO working groups are basically about what the GHGP has already proposed and has already made the claim that is more accurate and it's more precise. So we are happy to see that SBTi took a voluntary approach as to hourly matching, because again, the accuracy it brings or the impact it brings is a question mark for us. But on the other hand, they do mention deliverable market boundaries as well. And I think the phrase they use is interconnector access rights. So it's not clear to us what that exactly adds on top of that, because the idea of using environmental attribute certificates is that you have the energy identified and you can choose. So I often give the example, like if I go to a restaurant and I say I want food, and if you bring me pasta, I wouldn't say, why don't you bring me a burger? Because you could specify it in advance if what you exactly wanted was a burger. Basically, you don't have to purchase what you don't want to purchase. But now we see a clear way of, like basically one way of reporting prescribed to all buyers. And that is indeed starting quite some like discussions in the ISO working groups as well. There is currently the ISO 14060 net zero aligned organizations ballot for net zero aligned organizations. The ballot is basically for approving or disapproving the publication of the standard. The standard is not part of the GHGP ISO collaboration, but the working groups, working group 4 and the joint working group 8 are being informed by that as well. So basically the short answer is we don't know to what extent the dual logo process will be affected by the SBTi. Certainly both organizations are following each other's work, but basically where we are right now is the direction the AMI white paper was at, which puts location-based reporting as to the center. So that is the backbone of reporting. There is some even wording like that. We are not happy about that in terms of scope 2, because for scope 2, the location-based, it can be your physical inventory, but that's just an indicative number. It doesn't show any of your proactive efforts. And we see the corporate climate ambition and proactive efforts, the backbone of scope 2 reporting instead.
Thank you for that super helpful additional context about where everything is going. Just checking on the time here, we'll kind of move to the next set of questions. And really it's one just kind of again, kind of looking ahead. I'm curious to hear from all of you, and maybe we just do a quick round, is what is the biggest question you're focused on solving, whether your organization or yourself personally in the months ahead as it relates to anything we've talked about today or anything we haven't yet covered? So whoever wants to go first, please.
Happy to jump in on this. and these are all sort of points that I think my colleagues or my other panelists have already touched on. I think first and foremost, just trying to better understand how SBTi and greenhouse gas protocol will align and collaborate on the emerging frameworks and guidance documents. I think that's an area certainly to sort of watch and contribute to consultations or provide recommendations over the next few months. I think the other sort of big area or question is around the additional guidance that is forthcoming from SBTi later this year. Already mentioned the guidance on implementing market instruments. I think the guidance on market instruments for Scope 1 target implementation, while it might not be the topic and focus for this call, I think is one that I've heard from many is of interest. I also think the claims piece is a really important guidance or document that's needed to better understand what you can and cannot say based off of the actions that you take. And so I think just these emerging guidance documents, whether they are draft and up for discussion via consultation or they're final, sort of the areas that we're closely watching for additional clarity and understanding of how SBTi will recognize all these different elements. And I'll stop there just to keep it short and sweet. See if Marve or Shamini, you have other thoughts.
I can go next. And also apologies, my camera's doing really weird things. I've been trying to stealthily fix it, but I don't think it's going well. So I apologize for that. But certainly for us, I think at WattTime, we are a very impact-focused organization. So our biggest priority and the thing that we're really working on right now is ensuring that impact accounting has a defined pathway in target setting. Our strong belief is that unless we are providing a way that is required and recognized for companies to report their impact-focused procurement, impact-focused actions, it'll continue to be difficult for companies to justify doing them. And so we've been going on a journey of kind of bringing groups together and bringing organizations together and experts together to really think through how to set targets based on impact accounting. So that's I think our biggest, certainly my biggest focus right now. And I will pass to Merve.
Yeah, so for us, as I mentioned in the beginning, I'm also following EU policy regarding carbon accounting and Scope 2 reporting. And basically the EU legislation is keeping the focus on the single European market. So it would be very unfortunate if well-known standards such as SBTi or the dual logo standard GHGP and ISO recognizes only deliverable market boundaries, which is described in a very narrow sense. So in Europe, the power markets are coupled, and for attributes, there is a single market. And we are basically following. So our first focus, I would say, is the proper recognition of the market-based method, because that has been, we basically call the location-based the lazy method because you don't need to do anything for that. And obviously not every reporting organization has the capacity to relocate to other locations just for that. So that is our main focus. And the second one I would say is this definition of deliverability and the claim that it would bring further accuracy and further impact, because we see a lot of gaps in that argument. And lastly, it also links to these claims for accuracy and more precise reporting is more granular tracking. So it is already possible for organizations that want to follow that road. But if it is mandatory, as the Greenhouse Gas Protocol Scope 2 proposal put forward, then it would indeed shrink. It would basically destroy demand quite to a certain extent, particularly in Europe. So we are focusing on market-based method and the existing contractual instruments, and them being enough. If they are annual, we are advocating for monthly matching. But if organizations want to go for hourly, they are free to do so. But it doesn't necessarily mean that the more granular it is, the better it is. We say the higher the uptake of Scope 2 reporting is, the better it is. So that is what we are focusing on.
Thanks so much. So great discussion here. And I'm not seeing any questions in the chat, so I might just move toward wrapping up for today. So I think we've heard a lot of things during the conversation. So one, with SBTi's new corporate net zero standard, that there are more opportunities for companies to take action and have that action recognized for impact. Essentially, there are more places where that impact-based procurement can fall at the end of the day. That being said, there are still some big questions around how to actually implement in reality, because there is still some lack in the guidance, and it appears that the process will provide that clarity soon. And some of that clarity is in part dependent on the GHG protocol process. And I do see one question just came in, so I'll come back to that in a second. And that essentially now one of the biggest open questions really is the one we entered this process with a few years ago, which is around market boundaries and deliverability. So that question still remains open in a lot of ways, in a lot of senses. But at the end of the day, at least we know that one of these standards, the SBTi, has created that multi-path set of strategies available to corporates to have the impact. One thing I'll just quickly plug before answering this last question here is for any impact-focused buyers, I mentioned the Peace Renewable Energy Credit, or PREC, earlier. We've recently introduced a new way for companies to source PRECs in a way that's much simpler, and it's called the PREC Aggregation Facility to support new mini grids across sub-Saharan Africa. And I'll put a link in the chat. And it's our most recent blog from Energy Peace Partners if you want to check it out. And then just to come to the question that's here, the question's from Sophie. Thanks for that, Sophie. So the question is, what is the latest you see on timing regarding the AMI framework in terms of its being published and applicable? I think the unsatisfactory answer is that we don't fully know yet. I think it's certainly going to roll through into next year, and I think there's a hope that we can accelerate and have this process, the AMI process, catch up and align with the rest of the Scope 2 process, which has got a head start. But I think realistically, my gut feeling is at least it's at least a year and a half, just based on the pace of work. But hopefully we can accelerate and compress that time frame. And Merv, if you want to weigh in on this too, please go ahead. You might have a better idea.
Actually, I don't have much more clarity to add on what you said, but I have heard that there will be a meeting in October. So I guess after October, we would maybe have a timeline or a bit of a clearer idea, but certainly I don't think it will be before a year either. And in the ISO working groups, there has also been discussions to basically align Scope 2 and AMI processes. And I believe it's the same in the GHGP working groups as well, because right now it's happening in parallel, and that's very confusing. So I wouldn't expect anything before we hear more about the Scope 2 text either.
Thanks, Merve. Well, with that, thank you, everyone. Thank you, Chani. Thank you, Merve. Thank you, Laura. Good discussion today. And there will be a recording that we will distribute afterwards. And thanks for everyone's time and attention. And good luck with keeping this work moving forward to decarbonize our power sector. Thanks, everyone.
Thanks, Doug.
Thank you, Doug.
Thanks, Doug. Thanks, everyone.